Well, that was fun. Until they started to turn around and land on top of me. What's going on, everyone? So, if you haven't guessed it already, today's stock is all about aviation. And the company name is AerSale. They're a $477 million market cap company, trading at $11.63. Pricing is particularly important in this case. I mean, it always is when you're investing. But AerSale used to be a SPAC, that is a special purpose acquisition company. And the merger closed around end of December of last year. And SPACs generally come with a little bit of baggage, which is why there are some particular risks with this stock that I'll get into later on in the video. Okay, so what does AerSale do? And why do I think that they're about to make a boatload of money? Or I guess in their case, a plane load of money. So they specialize in commercial aviation aftermarket products and services. Their two main business segments are asset management and tech operations. In the asset management division, what they'll do is they'll buy planes or fleets of planes and engines, and they're specifically targeting the mid-life, mid-technology planes. So I'm talking about planes that have been introduced, around 10 to 20 years ago. And they represent about 75% of the planes that are currently out there. And then what they'll do is they'll take the planes and customize them according to their customers' needs. And then they'll either sell them outright or they'll put them on long-term leases. So lately, they've been doing a lot of passenger to cargo conversions, but they also do many, many other things. And once these planes get closer to end of life, they will disassemble them into used serviceable material, or USMs, and they'll either sell those parts or those parts will get used up in their repair operations. And so AerSale will kind of just pick the strategy that yields the most and best return. Their other business segment is tech operations, and this is where their maintenance, repair, and overhaul gets conducted, also known as MROs. So they will service and maintain airframes, engines, landing gears, flight control systems, electronics, I mean, you name it. AerSale does quite a bit. This division is also where they do long-term aircraft storage and also maintenance. Planes that are grounded for an extended period of time require a lot of maintenance. It's not just park the plane there and collect a service fee. It's actually, the engines have to be sealed up, the doors, windows, all have to be sealed up. Tires have to be rotated once a month, and they have to move the plane around. So it's quite a bit of work, and they generate good money from this. But pre-COVID, their facilities generally had around 100 planes that were grounded and upkept by them. During the pandemic, they're up to about 500 planes, so 5 times as much. And this kind of brings us to the macro picture. In 2020, we saw a tremendous reduction in passenger flights. And this reduction in passenger flights has caused a large number of planes to be grounded. So as you can see at the end of December, there were around 9,400 planes that were grounded. And these planes require a lot of maintenance, and this maintenance is extremely expensive. So airlines have been thinking about reducing their fleet counts, and at the same time they also want to simplify their fleets. So on a normal year, there are around 600 planes, give or take, that are retired. And industry experts think that this number is probably going to double in the next 2 years. And this retirement of these number of planes, it's going to take some time, because generally airlines retire planes when they get new deliveries on new technology planes. And since they're a bit strapped for money, I think, and industry experts think, that this is going to be sort of a slow, gradual churn over the next few years. And so with the large number of planes that are about to be retired, this is giving AerSale a really, really big opportunity to buy mid-life planes at a discount. So I'm going to show you a chart, and it relates to, well, I guess I'm going to show you two charts, and it relates to what happened to plane values during the prior two crises, during 9/11 and also during the Great Financial Crisis. And you can see that the value of narrow-body planes fell by about 20%. And here is a survey conducted by IBA, which is showing current values of narrow-body planes in February of 2021. And so this perfect opportunity exists for AerSale because as part of the IPO process, two things happened. One is all their debt was completely wiped out, so they have zero debt right now. And the second thing is, as part of the de-SPACing process, around $65 million of cash was also injected into the company. So what are they doing with this money? They have gone out and did exactly what we think they would do, which is buy 24 Boeing 757 planes. And what's really interesting about this is that because they have 500 planes that they're currently babysitting, they get to know these planes really, really well. And so they're cherry picking the best planes that they think have the highest potential. And then they're buying them. And so most of these 24, a majority of these 24 planes are going to be passenger to cargo conversions, and the rest of them will probably be disassembled and used for the USMs. Here's their press release showing the purchase of the 24 planes. And I believe the CEO has said that they've purchased these planes at about a 35% discount compared to pre-COVID prices. And so far in February, 11 planes have been delivered. And so these planes and future acquisitions of planes will directly feed into the growth of their asset management division. And then for the planes that they don't use, they'll become teardowns and be used as USMs. And so USMs are going to become highly coveted because they are generally 30% cheaper than the original manufactured products. And at the same time, pre-COVID, there really weren't a lot of planes that were being decommissioned. As you saw, there were 600 planes every year. And so the USM market was extremely tight. And planes that were sold in the aftermarket, they weren't sold at attractive prices where you can make a lot of money from the USMs. And so these planes that are now being sold at a discount are going to increase the profit margins of AerSale. Here's a chart of their track record, and it's created by AerSale, so take it for a grain of salt. But it shows their lifetime internal rate of returns at around 23% across all of their projects. And if all of this was not enough, there is further icing on the cake. So AerSale has developed this proprietary product. It is an enhanced flight vision system, and it allows pilots to essentially take off or land planes through bad stormy weather, such as snow or fog or rain or whatnot. And what this will do is avoid planes circling in the air or being, I guess, diverted to another airport. And so they've finished all of their flight testings, all of their bad weather flight testings, and it's now pending FAA approval. And they're hoping that they're going to start installing this system probably in 2021. And they've estimated about 16,000 planes that could probably use this system. So this is just a tremendous opportunity if this actually comes true. let's talk about valuation. So currently at $477 million market cap, they're generating about $50 million of EBITDA. So that's 9.5 times multiple. Next year, they're estimating to generate $54 million of EBITDA, and that's not including the 24 Boeing planes that they just purchased. So that puts the multiple at 8.8. This going from 50 million to 54 million is only an 8% increase, and I just, that's not too much to ask for. So, you know, companies, comparable companies in this space are trading at around 14x. So your upside is about 60% if it actually gets re-rated at that multiple. And let's say we take the halfway point and it gets traded around 12x. That's still a 35% upside from here, putting the stock somewhere around $15.80. Do I think that the stock can trade around $16? It's kind of funny, but actually it spent all of January last month trading between $15 and $16. And it really wasn't until February when I think somebody or maybe a few people decided to liquidate the stock that it finally come down to this price today. And if you really want to risk it for the biscuit, you could buy their warrants that are currently trading at $2.14. So a warrant gives you the right to buy their stock. It's kind of like an option. It gives you the right to buy the stock, except with warrants, it causes the company to issue a completely new share, and it gives you the right to buy that share at $11.50. So the price of the warrant plus the $11.50 gives you a break-even point of somewhere around $13.60. So the difference between your upside of $15.80 versus your break-even point of $13.60, that's your profit margin. And so what I'm saying basically is you can buy the warrant at $2.14 and you have about a $2 profit margin. So that could probably give you 100% returns. And that's actually kind of crazy just to think about that. But just note that these warrants have an expiration of 5 years. So you have 5 years to make all of your dreams come true. And then, so speaking of warrants, this is where I should probably talk about some of the risks relating to this company. So as you know, AerSale used to be a SPAC. It traded under the name Monocle. And the original founders of Monocle and the original shareholders of Monocle when it went public, they hold a lot of shares at a very low cost basis. Specifically when it went IPO, I think it raised 17.5 million shares and warrants. And so now there are 17.5 million warrants that are floating out there, and their exercise price is $11.50. So here's their S1. They just filed it in early February. And you can see that because of the 17.5 million warrants that are floating out there, they have to now register 17.5 million shares. So that when the warrants get exercised, they would have shares to hold. So that means you would have 17.5 million potential shares that would dilute the company, and the cost basis is $11.50. Which is why I say in the beginning of this video, you have to pay very close and be very price sensitive on your entry point of this company. Because the further away you get from $11.50, the more your shares and your earnings are going to be diluted. So even though it's not always possible to buy very low and sell high, you just want to be cognizant of the fact that further dilution at $11.50 is very possible. The other thing you should note is that the founders of Monocle, they hold a bunch of shares at a really, really super low cost basis. And plus, in the IPO process of going from Monocle to AerSale, $60 million was injected into the company by PIPE investors, basically private investors for public equity. And those cost basis on those shares were $8. So what I'm really trying to say is there are a bunch of people that got in front of you at a very low cost basis. And I think part of this share liquidation that I've been seeing in February are those early birds that are trying to get out and take some profits upon the IPO. So the second thing that that you should be aware of is there are a bunch of OEM vendors that are kind of eyeing the used serviceable material space. They know that OEM products are more expensive than USM, and they also know that USM is a growing market, and quite possibly it's going to be very profitable in the next 2 to 3 years. And so the OEM vendors now want to capitalize on this. So this space might get just a little bit more competitive than what AerSale thinks it might be. And for these reasons, I think the margins might not be as high as management thinks. So that's just to keep in mind in terms of how much EBITDA earnings you would possibly want to estimate in the future. And perhaps the third thing to take note of is, 40% of all global freight is transported and stored in the bellies of passenger planes. Which is why, since there are no passenger planes today, the demand for freight planes have skyrocketed. But as passenger planes start flying again, it might actually create an oversupply of freight planes. And that space might start getting a little bit more frothy. So you just want to keep an eye out for management and seeing how deep they're getting into the freight plane market. Because that space might start to get a little bit frothy and overvalued. So this is my analysis on AerSale. These are my reasons for why I love the company so much. I've been waiting for about a month and a half before the prices finally came down to this level. And so this is our opportunity to get in at a very attractive price. I hope that you enjoyed the video. Again, with COVID around, please stay safe. And I'll see you guys in the next video. Thank you.